All right, we have the enormous privilege to have our next panel is going to be hosted by Luke Broyles. Luke Broyles is one of the, I would say, most articulate, just basically people in the Bitcoin space. He hosts podcasts, he goes on podcasts, he helps people basically understand how to think about Bitcoin, contextualize it, all this kind of stuff. Luke's going to be hosting this panel, and he's going to be hosting it with Mark Moss. Mark Moss is a nationally syndicated radio host. He's the host of the Mark Moss YouTube channel, which has gazillions of views. And he's also been a seasoned investor for a very long time. And then rounding out the panel, we have Preston Pysh. Preston Pysh is a West Point grad who served as a military attack pilot, helicopter pilot in several tours in the Middle East, and then came back and got into investing and is now the host of the Bitcoin Fundamentals podcast and the founder of the Investors Podcast Network. Preston has the distinct honor of being one of the people who helped me understand Bitcoin. And so the podcasts that I listened to back then are still the go-to podcasts that I recommend people to. So these guys are incredibly generous with their time. And so please give them a good welcome, and we're going to get to benefit from them.
Great. Well, thank you all for being here on behalf of all three of us. Thank you, Jordan, for the introduction and for all the work you guys are doing and putting on this conference. It's been a wonderful day today, and yesterday was also excellent. So, Preston and Mark, thank you.
Hey.
Hey.
Yeah, it's a pleasure.
Yeah. So let's get right to it. Bitcoin is world-changing. Obviously, so far in this conference, we've been mostly talking about Bitcoin being world-changing from a theological and humanitarian point of view. Maybe we touch on those things, but also from the macro point of view, right? We've all noticed things have gotten pretty weird in the last 5 years. Why are things getting weird? Why do things feel like that they're getting worse? Even though we're told everything's fine, everything's getting better, what's actually going on? And then how could Bitcoin be a world-changing solution to those problems?
Well, I mean, I like the theological, the biblical discussion of why things are getting so wild, and I think it all ties back into the money, right? And so, sort of maybe a safety is, fiat money, fiat world, fiat money, fiat food, et cetera, right? And so it's really a breakdown in the money, and then when you have a breakdown in the money, you sort of have a breakdown in the social fabric of that country. And so when you think about the effects of inflation, it's a lot deeper than just your standard of living going down. And so, the website I'm sure most people have been on, when WTF happened in 1971, you can start to see it's not just, runaway government spending and runaway debt, and obviously prices increasing from that, but you can also see that the single mother rate exploded, and the incarceration rate exploded, and the divorce rate exploded, and so the obesity rate exploded. And so those are all things that break down that social fabric, right? So it's a lot more than just money. And of course, as money continues to break down, so sort of more from like a macroeconomic perspective, it also shifts things, right? And so, and really we can go back to a quote from Vladimir Lenin from the Bolshevik Revolution, and he said that the best way to destroy capitalism is to debauch the currency, right? To inflate it away, to destroy the currency. And he said you do it through a series of inflation, and he said through arbitrary inflation you can steal wealth, and he goes on to say at the end, until all relation to money is lost, until the best way to get rich is gambling and theft. And so I think that's pretty apparent today, right, with the rise of the meme stocks and game stocks back and the NFTs and all these things. And so it's either gambling, like YOLO, let's go, or outright theft. And so, we see that from the highest levels of the government, and then that sets the trend for the rest of the world. And so really it's a breakdown in society. And so as we get further behind on this macroeconomic scale, leaving the gold standard, going into now a debt-based standard, a debt-based system, that debt is literally stealing from the future now. I mean, it's theft at a whole nother level. And so now we're literally stealing from our kids, our grandkids, who knows how many generations we've stolen from at this point. And so then that just continues to perpetrate until eventually, I guess it just can't go on. I mean, that's kind of the big picture of how money degrades society. I don't know if you want to dig in deeper into the actual mechanics of that.
Yeah, I would just say on the actual mechanics of it, the petrodollar system worked pretty well, especially for developed nation states, simply because if you had a lot of money, if you were making billions of dollars, you preserved and locked in that buying power by owning long-duration U.S. Treasuries, was the primary vehicle. And as long as interest rates continue to go down like they did for 40 years, everybody's pretty happy locking in U.S. Treasuries as their way to save and preserve that buying power, because they just kept going up in buying power or value. This works until you start to hit like the lower limits of the yields, which, you know, the prices are sky high in fixed income. I think that COVID, when we had 10-year treasuries at like 50 bips there, leading up to COVID and through COVID. That was the top in fixed income. And I think when you look at all of the enemies, is the word, I'm using quotes here, of the US, NATO, it's really fascinating to me that they're all net producers. They all produce in excess of what they actually consume. And when you look at all the countries that are our friendlies or our allies, and I'm saying this as a retired military person, right? They're all net consumers. And so this arrangement of this net consumption versus net production and the strife that's happened, the reason that it's flaring up and getting worse now is because as you're paying them with additional keystrokes by adding more fiat into a system, but you're retaining it in a fixed income instrument that the yields kept going down and the prices kept going higher, nobody had an issue giving up physical things and services for that exchange because they were preserving it in something that got more valuable. But now, all of a sudden, after you've peaked out the prices and the yields got compressed to almost nothing, I mean, there was, what was it, 19 trillion worth of negative yielding bonds at one point there in 2020. I think it was 2020. Just to kind of emphasize how high the prices got on fixed income, you're at a changeover and a shifting point, because in order to keep those prices at where they were at or go higher, you have to continue to keep inflation masked in fiat terms and hide all of that. So now, isn't it interesting that this idea of ESG and we need to reduce the amount of energy we're using and we need to cut back on red meat and all these things, these are incentives to mask the underlying price that's trying to percolate out of it and demonstrate that prices should be higher.
Because bugs are cheaper than cows.
Exactly. Because we can mask it if we're telling people to eat bugs versus high quality meat or, you know, whatever, we could get on the nutrition path. And so when we're looking at these narratives and these things that we're being told, and you look at the incentives that underpin all of that, what it leads you back to is the money, the petrodollar system is at a breaking point and it's starting to really unwind itself. And I would tell you that key point, the end of that 40-year bull market was really COVID.
And to add on to the mechanics of that, just so we can understand sort of the directionality that we're headed, is that not only is all of that exactly right, what Preston's saying, but there's another big shift that's also happening sort of more from like a geopolitical standpoint, and that's sort of this global dollar homogeny sort of breaking apart and moving into this multipolar world. And so you can look back since the end of World War II, the world really became more and more centralized, more globalization, but really centralized under a dollar standard U.S. world-led order, if you will. And that helped to hide or to mask, as Preston was saying, all of that inflation that we've had. And so as they were printing an enormous amount of money at a faster and faster pace, causing more inflation, it was being offset because of the lower labor rates and lower manufacturing prices and stuff like that, because we were able to make stuff and trade with people around the world. But now as that's all being threatened and all falling apart at this point, it's over. Like the BRICS, they're on their own. Like Russia and China are never coming back into the fold. Like the WEF and that order is sort of over at this point. And so that means less trade and less cooperation. That means more expenses to ship things across the ocean. I mean, right now they're having massive problems with pirates in Somalia, for example. So that brings the cost of goods up. Oil can't flow through the straits, now has to go around the Cape, right? That brings the cost of everything up. And so really a lot of what we've seen with this bond market that's been the sort of, as Preston talks about, typically like the bedrock of this financial system, and we've been on this trending down, and as he said, he kind of called the bottom of that, and a lot of that we're also seeing in this geopolitical picture. They don't want to put their money into that bedrock anymore. They can't trust it. Let's just hold it on our own. We'd rather hold the oil, the gold, the lithium in the ground, the commodities, And maybe we don't want to trade as freely. So instead of just in time, now we'll keep it just in case we need it. And so that's also a really big trend. So we're seeing the entire bedrock of the financial system upend, as well as sort of the geopolitical picture start to break apart at the same time. For me, it's one reason why I've been an inflation bull. Like, I'm an inflation bull. Like, prices are going higher. I mean, there's a lot of talk about the strategic imperative of the United States to now onshore or near shore, which sounds great. Sure, let's bring jobs back. So instead of getting things for $10, let's just pay $100 for them. Sounds great. And it is good, but it's also bad. And so everything has a cost-benefit analysis. You have to understand that. So in addition to the bedrock of the financial system being upended, what we've known as far as lowering prices on lots of goods and services is also ending as well.
And if you're a Bitcoiner, prices are just going to keep going down.
If
So
you have the
that's
right
good
unit of
news.
account.
Yeah, exactly.
I think that's perhaps one of the most difficult things for people to mentally shift with, is changing their unit of account and understanding Bitcoin in that view, because most people view it as something that's continuing to just go up forever. So a lot of people here in the audience are Christians that are relatively new to Bitcoin, or they're perhaps trying to help their pastors or their friends, family, coworkers, whomever understand Bitcoin. So I think you guys gave a great explanation of where we've come from. If we could perhaps delve into a little bit where we think we could be going. And I think a lot of people, when they try to speculate on where we are going, they think that there's multiple problems in the secular world, right? That, oh, we have an election year this year, right? Maybe we want to talk about that. We need to fix money, and we need to fix politics, and this and this and this. Could you guys explain why all these things are really one and the same? And then how does Bitcoin in the future, what's the hopeful outcome of how we could thread that needle of avoiding the worst potential outcomes?
Write a book on that?
It's a shift in incentives. So the incentives right now for people that are still tied into the legacy system is, I need to spend as fast as I possibly can. I need to borrow, because that's how I can manage this legacy model and this legacy system as effectively as possible. That's the incentive. We're moving to a new system where the incentive is, I'm going to work, I'm going to produce some excess, and I'm going to store that and preserve that into something. And I have the incentive to not spend as fast as I can, because it's going to be more valuable tomorrow and the day after that. And so I just, having been in Bitcoin for some time, I see the way that my incentives have changed from Preston of a decade plus ago. Because I look at things way differently. Like, can I afford a first-class ticket when I fly? I sure can. Do I do that? I don't. I fly coach. And people might look at me and be like, that's crazy. If you could afford this, why don't you do it? And it's like, because I know what I own, and I have this incentive that I want to try to preserve it and have it. And this is one person, one example, but I'm using it to try to illustrate that just because I can go out and buy a new truck doesn't mean I do. I have a 2017 F-150. Can I go get a new one? You better believe I can, but I don't need to. I'm satisfied with it. It works, right? And I think that mindset, and I think the volatility in Bitcoin relative to fiat is why you don't see more people kind of seeing this today. But I think when you warp yourself 4 years, 8 years, 10 years into the future, or whatever, let's just say 10 years from now, I think you're going to find that a lot of people are changing the way that they think about their incentives, their consumption, and it's going to be drastically different than what we've seen for the last 40 years. And I think this is really healthy for society. Mark was talking about like the desire to speculate. When you can't retain anything because competition is so cutthroat, because they're just clacking on some keys and adding more units into the cronies at the top, and the people at the bottom are struggling to just keep their head above water, you're forced into this incentive of how can I just make a quick buck so that I can keep my head above water. It's the incentives that are driving us here. And you know what, as a Christian crowd, it's very easy to quickly just start pointing your finger and saying, everybody's bad, everybody's evil. People are not any better than their incentives. And the incentives of this legacy system is to spend, 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 get the money out the door because it's worth less tomorrow.
Yeah, consumption, consumption, consumption. The fiat monetary system that we have today is just really, it's the opposite of a biblical worldview. right? I mean, the Bible uses money over and over and over in all types of stories. Jesus, of course, used them in many parables. And, one of the things they talk about is like honest weights and measures. The fiat money is the opposite of honest, right? There is not a way to measure anything that's always constantly being manipulated. I think it was in the original Thank God for Bitcoin book that it talked about really most people have thought about, and I always thought about money being a neutral tool. It could be used for good, it could be used for bad, but really fiat money is not a neutral tool, because if you create a system that's built on theft, inflation being theft, built on lies and deceit, then everything that's built on top of that is also inherently evil. And so it just goes on to poison everything. And again, being anti-biblical worldview, back to what Preston was saying, consumption, consumption, consumption. If you believe in God, and you then believe that we were made in God's image, well, then you would just ask yourself, well, then who is God? And it tells us right there in the beginning of the Bible in Genesis that God is a creator, which means we're meant to be creators. We're not called to be consumers. We're called to be creators. And so if we're called to be creators, then we need to be saving money and building value into the future, as opposed to constantly stealing, which again, back to as he said, Preston said, right, the tools that we have today. We use debt to get ahead today because we're in a debt-based monetary system. However, debt is stealing value from the future, which is why the Bible talks about not being a servant, to the lender there. So I think it's really a completely different system. I know, as Islam or whatever has sort of approved Bitcoin that kind of fits within their religion. But if you think about it from a biblical worldview, it also fits in as well. So if the fiat system is built on theft, lies, and deceit, Bitcoin is built on open source and truth and trust. The devil's called the father of lies and deceit. Not to say Bitcoin is God or was created by God, but I mean, it is a system that's opposite of that, right? And so I think it gives us a chance to build an open, an honest, a transparent world. It gives us, as Preston said, it sort of changes our worldview to where we want to start thinking long-term and pushing value forward instead of stealing. And so it changes us to now have that mentality where we want to build the future generations. We want to give to others. We want to, as I said, produce. So I think it changes the whole world for the better. I mean, imagine if, as Preston was saying, and off of my comment about the best way to get rich is gambling and theft, if the whole world or a majority of the world went from that mentality of what's in it for me right now and shifted to a value-based worldview. I mean, imagine how much more or how much better the world could be.
I think that's a wonderful framework, and I think a lot of, all of us, I think, here really appreciate that, because in Bitcoin we see a lot of that, sometimes worshiping of Bitcoin, but ultimately Bitcoin is reflecting mathematical truth, and God is the one that made math, right? And so I think that's such an important distinction. So we've talked about the problem, where we are. We've briefly talked about where we think we're going. Practically speaking, what do you both think about Bitcoin as a reserve asset? Obviously, we have three different levels here, right? We have the nation-state level, right? Former President Trump, Vivek Kennedy, they're all now talking about Bitcoin as a treasury asset on the nation-state level. And then on the corporate level, I think that's a question a lot of people here especially have, right? A lot of people here are either involved with churches or mission organizations or other boards that are trying to figure out how to integrate Bitcoin into their organization with a Bitcoin strategy. Like, realistically, how do we do that? And then also, I think that relates to business, right? Both of you are involved with large businesses, Bitcoin Opportunity Fund, and then Ego Death Capital, right? So and then of course, the third level being the individual level, right? We all eventually want to retire on Bitcoin, live on Bitcoin, and so all those three things together, I think, comes down to how do we actually practically implement a Bitcoin strategy and Bitcoin reserves for our churches, companies, nation, and ultimately ourselves.
So I would break it into two categories, and I would say that you have the corporate, the individual kind of strategy, and then you have a sovereign strategy. The corporate individual strategy, you have to produce excess. So if I go out there and I spend $90 making a product, and I sell it for $100, and I net 10, I pay the tax, and let's just say I net 10. I have some form of excess, and if I can do that over and over and over again, and at the end of the month, let's say I made $10,000 at the end of the month, and I can do this sustainably through some type of competitive advantage because I continue to provide efficiency to somebody else by me working on this versus them not, I can save that excess in Bitcoin. And I don't have to worry about ever selling it because the next day I'm going to have another $10 or whatever that net is coming through the door. And you have to have some type of excess that you're providing to the world through some type of efficiency gain to other people in order to really kind of have a Bitcoin strategy. When we look at the sovereign strategy, you don't necessarily have to do that. Now, if you're looking at it from a global perspective, is that the most beneficial thing to do for the whole world? Probably not. From an individual or from a country level, they're highly incentivized to print and to take whatever portion. I would describe it as a percentage. That, let's say, for every $100 they print, they need $2 worth of Bitcoin that they're buying to back whatever that debt issuance, because this is the debt fractional reserve system, needs to be part of that in order to hopefully protect the buying power of that issuance. The issue that you're going to run into, and I don't mean to like get into the weeds too far on this, you're already seeing issues with long duration debt issuance here in the United States, everywhere else in the world, and if you want to have some type of stability in society through the fiat continuing to like gradually transition over to this Bitcoin standard, they have to start backing up, especially long duration debt issuance, with some form of really strong, stable money. People will say it's gold. I'm of the very strong opinion, I'm very biased, that it needs to be Bitcoin. I would say at today's prices of where we're at right now, that's probably about 2% of whatever is issued at par needs to probably be backed up in Bitcoin in order to actually create a demand for any type of long duration issuance. I think when the price of Bitcoin's around 500,000, it's going to be probably at 10% backing, and it only goes and accelerates from there, which I think is going to be very confusing for a lot of world leaders. But if I was advising a presidential candidate, these are some of the numbers that I would be telling them that they probably need to be doing. Now, the last thing I'll say on this topic is, do you do this in an open kind of way? And if the answer is no, and you try to like compartmentalize this strategy so that you can kind of get ahead of other countries that are eventually going to figure this out, how do you do that and keep it private without it being very noticeable, especially at the size, specifically here in the United States? How do you do that in a way that the market doesn't quickly figure it out, because the magnitude of how much backing they're going to have to buy is going to tip off the rest of the world as to what's happening. So you got a real challenge there. Whether you're able to do that in a way that gradually makes this transition over to Bitcoin more accommodative for society, I have no idea. I really have no idea, but those are some of my thoughts on the difference between the two.
Preston did a really good job covering the sovereign side. I was going to start on the individual side and work my way up, but just to key off of kind of what he was saying, you know, it's really interesting because El Salvador sort of being the first mover advantage in this game theory that we're playing out, you know, they adopted Bitcoin as reserve currency, and then of course started putting it on their reserve or their balance sheet, right? And are openly buying it on a regular basis to do that. And Bukele has been seemingly has been somewhat influential. He's been meeting with heads of other countries, smaller countries, UAE, you know, Sudan, et cetera. And, you know, we can get that sort of decentralized sort of groundswell up where the small countries move first. I always figured the U.S. would be the last country to move because they have the dollar. They have the one to lose, right? That's the one to lose everything. So to see Germany selling Bitcoin makes sense because they need euros. They can't print euros, right? So maybe they need the euros. But the U.S. now has this 200,000-ish Bitcoin on its books, and could they potentially keep that? We're going to hear more about that at the event this week. But to Preston's point, if the U.S. openly decides to do that, it could set off a massive stampede. Again, an El Salvador moves, Argentina moves, like, okay, whatever. If the U.S. moves, everybody moves. So that's a pretty big deal, something to keep an eye on, and it could be kind of dangerous. But let's go back to the individual for a minute. And you had asked about from an individual level, maybe from a corporate level. And the first thing I would just say is that you have to adjust your unit of account. And you have to do this first by realizing something crazy, and that is nobody wants money. we only want the goods and services that we need to live or that we want, and money is just a way for us to get those things. Money is a way that we can store our wealth until we're ready to get those goods and services. And the reason why I say that is because it's just a medium of exchange, a store of value medium of exchange. And so we have to start to think about everything as an exchange or a trade. So the U.S. median home 4 years ago was $319,000. Today it's $460,000, but in Bitcoin terms, it went down. If I price that home in tons of rice, or in pounds of oranges, or in barrels of oil, or in ounces of gold, the homes got cheaper. It's only in US dollars they went up. And so when you start to go, well, how much is it in gold or oil or rice or Bitcoin, then you can start to think more freely about things. So then back to, from an individual standard, Preston had talked about earlier, like my cost of living is actually getting cheaper because I price things in Bitcoin. So the whole world is dying under inflation. Everything's getting so expensive, and maybe for a lot of you, you can't travel, go out to eat as much or whatever because everything's gotten so much expensive. But the way Preston and I look at things is things are getting cheaper to us. And it's not that we're any different, we just use a different unit of account. So from an individual level, just start to think of the way that you price things, the unit of account that you're using, and change it that way. Now from a corporate level, it would also sort of be the same thing. And Luke mentioned I'm a partner of the Bitcoin Opportunity Fund, and he has Ego Death, and we use Bitcoin as our unit of account as well. And when we look at investments that we're doing, like we're trying to return multiples on top of Bitcoin, because that's our unit of account. So if you start to change it that way, and from a corporate perspective, it would be the same thing. So now you sort of have this, Michael Saylor would use the word hurdle rate, right? If I borrow money, I have to pay 6-8%, that's my hurdle rate. I need to make more than that cost of capital. And so when I have an investment decision in my business, what's my return rate? And I could say, well, Bitcoin's gonna be doing, who knows, 25, 50, 100% return. That's my new hurdle rate. Should I invest it into buying this new truck or expanding my office or into this hire? What is my return on hiring a new business development manager or whatever this cost of capital I'm looking to allocate versus the cost of holding it over here? And so you start to just look at the world differently, price things differently from an individual level or even from a corporate level. That's kind of the way I would look at it.
That last point is like one of my favorite things to talk about. And it's like, imagine you're a business making money and you have a choice. I can invest this back into the business operationally by creating new revenue sources that hopefully have similar margins to what I'm already making. Or I can store it, I could buy marketable securities, I could buy gold, I could buy Bitcoin, I could do all these things. When you're looking at Bitcoin's performance and the numbers that he was throwing out, let's just call it 50% annualized.
Which is low historically. But
yeah, which is being kind and very conservative historically as to what the actual performance has been. And I like to look at it in 4-year chunks, like what kind of performance am I getting in any type of 4-year period of time? And I think 50% is actually a pretty conservative number from what we've seen historically. So if you're sitting there at the business and you made $100,000 this month, and you can choose between, well, I'm gonna go invest in this I'm gonna go upstream of our main product line, and I'm gonna invest this $100,000 that we just made into this new product line, and you're saying the return profile looks like it's 20% on that investment. Well, why in the world are you doing that? Because that's a bad decision. You should just buy Bitcoin and put it on your balance sheet. I mean, that's the math. That's the hurdle rate. And I think this might sound really extreme. These numbers, for anybody in traditional finance hearing these numbers, they're like rolling their eyes probably hearing me say this. But I can tell you, and I know that's how you guys think about stuff there, that is how I'm doing my math and how I've been doing my math for quite a few years now. And it's served me very well to keep myself out of what I would say investments that don't have a high enough margin of safety versus the opportunity cost of owning really sound money.
For a little bit of context to that, I think literally yesterday there was someone that went on, I believe Fox News or one of the mainstream news channels, and he was talking about Bitcoin might hit $3 million in the 2050s or whatever, right? But if you actually analyze that out, that's a 16% compound annual growth rate, right? So even on a long enough time horizon, which I think most people here have a long time horizon, if we look out just a mere few decades at the length of a mortgage that someone gets on their house, we could be looking at significant values of Bitcoin in terms of the fiat. But as you correctly pointed out, Mark, the better unit of account is Bitcoin, not dollars. So as we wrap up here in the last couple minutes, what do you think is a good target for people to strive to when it comes to having a unit of account, right? Most people, not necessarily in this room, but most people that are new to Bitcoin are viewing Bitcoin as a means to the end to hitting their financial freedom number in fiat terms. But when you look at the reality, there's 21 million Bitcoin, there's X million companies, Y million people, or Y billion people. What do you think should be a good first step, whether it's a percentage or a number of Bitcoin? What do you think people should strive to get to that off zero point?
We'll get off zero first. That's number one. I mean, it's different for everybody. There's no blanket answer. I think get off zero. That's a must. It really comes down to your conviction. It comes down to your conviction level, right? So if I believe there's a 50% chance that Bitcoin succeeds, then maybe I'd allocate 50% to it, right? If I think there's a 10% chance, then maybe it's a 10% allocation, right? So you kind of have to figure out where your own conviction is, what your risk levels are, what your time frames are, what is it you're trying to do. There's a bunch of different factors. I would say, though, just because I want to use Bitcoin as my unit of account doesn't mean I have to be all in Bitcoin. So, for example, I use US dollars as my unit of account, but it doesn't mean everything I own is in dollars. I own houses. I'm one of those psychopaths that still owns real estate. I still like real estate. I own businesses. I own other assets besides Bitcoin. But yet, and so I don't have everything in dollars, but I use dollars as a measure. You can also use Bitcoin without being all in on Bitcoin. But as far as that allocation, it just really comes down to your conviction. And what I would say, and what I typically say all the time, is that risk is in the investor, not the investment. So I would only invest up to your level of conviction. Your level of conviction will come down to the amount of time and energy you've put into investing into understanding Bitcoin. I've been doing this for now, I don't know, 7, 8 years, and like I'm still learning more, and my conviction still continues to grow. And it really kind of hit me, I think it was maybe around 2020, 2021, and I just thought, man, my edge is Bitcoin. I know so much about it, not everything, but I know a lot about it, but my allocation doesn't really reflect that. I think I need to step up even a little bit more. And so as you'll continue to learn and continue to grow, your conviction will grow, your allocation should grow. And whatever that percentage is for you, I don't know. Obviously, it also depends on the amount of money you have. So if you have $1,000, like YOLO, just put it in, right? If you got 10 million bucks, you're probably not going to put all that into Bitcoin. So I don't know. It's not a direct answer.
Well, there's nuance, right? And I feel like a lot of people get scared and they do nothing, or they think that to understand Bitcoin, they have to go all in, because that's what typically, those are the two extremes that they see, right? So I think that's a great answer. Do you have anything to add?
I think on the conviction front, people have to, and people are so good at lying to themselves, they have to be really objective in why they have conviction. If you have conviction because your dad has conviction and he did a bunch of work to understand it, and he says you should buy it, and that's why you're convicted, you're going to get wrecked, right? Because that conviction and his decision making and his proof of work to understand it isn't going to hold up in 70 to 80% annualized volatility type asset. If you've got conviction because you spent 100 hours plus studying the daylights out of this thing, and you actually understand the problem, you understand the solution, well, when you have a 70% annual volatility type thing, you're kind of looking at it and you're saying, oh my God, this is a buying opportunity. And so you're looking at it very differently because you've matched your position size with the intellectual work and rigor and proof of work that is required to hold something that has that much volatility. There's nothing scarier for me than somebody who hears about Bitcoin the first time, they buy it, they see tremendous, market action in a favorable direction, but they didn't match, they didn't follow up with all the work that was required, and like, oh my God, I love it, and then they push a whole bunch of their fiat into it. It gets really volatile, and they're like, oh my God, I didn't know what I had, and they sold it, they lost money, and then they disappear. This is the really hard part. They disappear for 4 or 5 years until the price is now ripping 10x higher than where it was when they sold, and they literally lost all of that because they actually didn't do the work. And so when we're talking about position size, I think it's so, so important. If you're in this audience right now, and this is the first time you're hearing about Bitcoin, and you're like, wow, this is some really interesting stuff, you have to be very careful getting into Bitcoin if you're not matching a position size with deep intellectual knowledge and proof of work on your own to own these things. Because I tell people they're like infinity stones. If you've ever watched the Marvel, like the people that handle those infinity stones that don't have the the moral fortitude to be actually handling them, they turn to dust. And Bitcoin can kind of do that to people if they don't actually understand and have matched it with intellectual rigor. So.
And to kind of bring some of you guys up, maybe up to a little bit of faster speed here, a little bump start, if you will, if you're just kind of new. When I started my real estate career, I started in real estate, and we typically have, don't buy a house unless you're ready to hold it for at least 5 years because of the cycles. And so there's 7-year business cycles. Everything has these cycles. And so Bitcoin has these 4-year cycles. That's what Preston said. He likes to look at it over like a 4-year period. So what I would say when it comes down to like how much should I allocate, certainly what we just said, like learn it, have the fortitude, do the research, et cetera. But think about the time frame at least. At least if I'll leave you with one thing is that time frame. So there hasn't been a 4-year period where Bitcoin's price has been down. So if you want to buy right now, but in 6 months you might need the money, probably don't put that money in. So I would think about it at least a little bit longer term. Is this money I can put in at least for 4 years? Am I willing to at least wait for that drawdown for it to come back? And if you can lock it up for that amount of time, that might help you with an allocation amount. But it still doesn't mean that you can shortcut and not do the work, but that's a little head start.
Yep, I think it's a great answer. A lot of people in here are, again, trying to help these organizations understand it. I think it's so important to what you both are saying of it's really critical to get off zero as fast as possible, but not overdo the confidence, because ultimately getting off zero is about getting that emotional intelligence and conviction around Bitcoin, and going too all in might actually undo the very progress you're trying to make. So thank you both for your time. Really appreciate it. One final question. You both are amazing at explaining Bitcoin, and we want everyone in the world to adopt Bitcoin. But of course, we're here at Thank God for Bitcoin conference. So if I could just ask you about Jesus, if you're going to try to Jesus pill, let's say somebody, or white pill somebody, or whatever you want to call it, if you're trying to share the name of Jesus with somebody, what is the way you would go about telling someone who Jesus is, in your own words?
For me, I like to kind of drop all the religious things and all of those things. It sounds like a lot of work. And I typically like to lead with love. Like what the world needs right now is love. It's the most important commandment. All 10 commandments can be summed up in love your neighbor. If you love your neighbor, you don't kill him. You don't envy him. You don't steal from him. And so I like to lead with that. The world needs that. I think it's a message of love, and I think that's what the world needs.
It's hard to top that, because that is spot on. It's all about giving. It's all about giving your energy to other people in a way that you meaningfully are doing it and not expecting anything in return. And that's really kind of what Mark's saying with love. And you got to be the example. If you're out there preaching and telling, it's like raising kids, right? You can go there and you can tell your kids, oh, you need to do this, you need to do that. But at the end of the day, how do they actually learn? Through good or bad. They're going to learn through your example. And I think that the best thing we can do is go out there, actually be loving, caring people that are giving to others, and what an embodiment of what people will then want to follow through inspiration, as opposed to fear or making somebody feel bad because you're preaching at them. So that'd be my point.
All right, well, thank you guys both for giving your time. Thanks for being here. Appreciate it. Thank you, everyone.